Good morning, everyone. It is 6 a.m., half an hour before the market open on Monday, March 18th, and it's setting up to be a very decisive week. We'll go over all the reasons why in just a moment, but we could get very directional this week. There's a high potential for us to either decide to keep on moving upwards or to break down below that uptrend that we've been enjoying and move lower. So we're going to want to watch things very carefully throughout the week and look for signs that we are going to move either up or down. So let's take a look at our futures right now and see how they're opening up. And it's big, especially in the NASDAQ. So the S&P 500, 0.75% right here, which is huge. That's about double what we're looking for in order to be considered significant. And then in the NASDAQ, we're at about 1.2%, which is about 4 times what we're looking for in order for that to be considered significant. What's really interesting, though, is the Dow Jones is only here at 20 basis points, which is not even what we would expect for it to be significant. So we would consider this random or randomly up in Dow Jones, but hugely and significantly up for the S&P 500 and NASDAQ. That probably means that tech is really leading right now. So because we have such a huge difference between the NASDAQ and the Dow, and the S&P is as expected in between, but we don't get much tech in the Dow Jones. So we really have a separation of sectors. Whether it's tech or not, we do have a huge separation in sectors. Money is looking for speculative opportunities at the moment and really ignoring the blue chip sectors. However, we need to be very, very, very careful here because this is a huge jump upwards. On Friday, we look at that QQQ, we came down and broke below this trend line and below the EMA 20 on Friday. And now we're jumping right back up above the EMA 20 to the EMA 8 on the open. So that's a lot of movement. That's volatile. That's volatility. And we want to be careful anytime that happens. I'm going to remove this trend line right here so we can see it a little bit more clearly. Now, we don't want to get too excited. We did break below the EMA 20 right here, and then we popped right back up. And broke below the EMA 20 right here and popped right back up. So just because we break below that EMA 20 and we break a trend line does not necessarily mean that we're going to continue in that direction. We need to have confirmation. So the fact that we're opening up close to the EMA 8 and above the EMA 20 is indicative that we could bounce and that we could be saved from a break of the uptrend for the moment. However, we have been chopping sideways for the last few weeks, almost a month, and we're not going to get too excited just because we hit that EMA also. So what could happen is during the day, this sucked, we freaked people out on Friday. A strong open sucks people back in. We start to head higher. Then either today or with significant news later this week, we start to head lower, and that's a break of trend. That's the real break of trend over there. We give them some stuff to be optimistic about. We suck a whole bunch of people into the market, and then that's when we really go down. So we really do want to tread carefully this week. The big news item that's going to be this week is the FOMC announcement on whether or not they're going to cut rates on Wednesday or for the March meeting. Now, we're pretty sure that they're not. We got about 99, or at least the last I looked, we were about 99% confident that they were not. Yep, still 99% sure that they're not. So if they do cut, that is going to send markets way up because it's completely not what is expected in the market. If they cut, there's two things that could happen. Or sorry, if they don't cut, there's two things that could happen. The market either doesn't react because we weren't expecting to cut, or we start to move down rather quickly. The second scenario would be because they don't cut and they give indication that they're not going to cut for a while. Right now, the market is expecting a cut in June. Let's see, June. Yeah, we still about 58.5%. We were about 70% last week. I mentioned that we're probably going to get down below 20% pretty soon. We are creeping downwards, but after Wednesday, so Wednesday, it's March 20th. Yes, Wednesday. So after Wednesday, if there's a clear indication that it's not going to be June, then this is going to go way down. If it looks like it's not going to be July, then all of these are going to go way down. And so the later it seems like it's going to happen based on what the Fed announces, then the worse it's going to be for the overall markets and will start dropping. So one thing to really watch carefully is TLT. TLT, that has potential to keep on dropping this week after the announcement. And then we want to watch very carefully what it does to our major indices. So far, we've only looked at QQQ. So we want to be super careful here. We don't want to get too optimistic over what happens in today's session or tomorrow's session because of that FOMC announcement. It's going to be the news item of the week. At least last week when we looked, we didn't see anything else. Yeah, there's nothing else. We have the announcement, then the press conference half an hour later. And then it looks like Powell's going to speak again on Friday, but really this is going to be all eyes over here, and there's not really any earnings left. Got Nike, that'll be significant for retail. Micron, somewhat significant, not super significant in the semiconductor space. And then we got FedEx. Yeah, there's a couple big names in here, but this week they're not going to be that important. We got the FOMC meeting. There is one other item, which is NVIDIA. NVIDIA is holding their whatever conference, which is it's not something that they've done before, but they're holding a conference, and all these people who are in the space, in the semiconductor space, in the AI space, they're going to be attending. Now, what that's going to do is most likely for the SMH, it's going to give it a little bit of a boost, because when companies do this and they hold conferences, they tend to announce really good news or really optimistic news or new product launches, things that tend to make their company pop a little bit and people to get excited. They don't spend millions of dollars and invite a whole bunch of people and sector reporters and sector leaders to a large conference to tell them bad news. They do it to get everyone excited. So that's going to give us a little bit of pop over here in the SMH. And then again, we are at a deciding point in the market. So there is a potential for us to pop up, and then any movement upwards could get smacked down. There could be profit taking immediately afterwards, which could send us into the downtrend. So I'm not saying it's going to happen. I'm just saying that there is a lot of things that are setting up for us to get our capitulation bar that we've been looking for. Our large green volume with large green upward movement and that would be capitulation. That would start sucking in all the leftover people who haven't been participating in this rally, and they'll be feeling like, oh my gosh, I keep missing everything, and now look how good Nvidia is doing, and they're not gonna, they're doing super well, and we're flying up here, and finally that last bit of money comes into the market, and that's when the market starts to drop. Okay? So we're going to be looking very carefully for all of that. Let's look at the S&P 500. Let's see if we see a similar story. We dropped to the EMA 20s. We did not break that trend. It's looking like we're going to open just above that EMA 8, which is looking really great and optimistic. People will get really excited. Oh my gosh, we bounced right off the EMA 20 again, but we'll still be in this choppy sideways movement. We'll still be within this box that we've been drawing. And if we can't get above the box with conviction and with momentum, then we're probably going to stay in the box. Now, why did I say this week was high potential for directionality, either a break of the box to the downside or a break of the box to the upside? Well, we already talked about the FOMC, which will be a huge announcement that can change the directions of markets. We have the NVIDIA conference, which is a large news item, which could set the market up for capitulation. But we also have been trading sideways into this uptrend, and the last Friday was the first sign or the first threat that we could simply chop sideways through this uptrend. So if we just keep on going sideways, eventually we're going to just chop right through this uptrend line or break above the box. And that looks like it's going to happen. We're going to have one or the other this week, just based on the timing of and the movement of where the box is. So we have all these things converging this week, and it's very likely that we're going to get that movement. So we want to be very, very careful. If we're day trading today, what we want to see is, since we're moving up so significantly in the QQQ and the SPY, I would choose a QQQ stock that was doing really poorly, that is on a clear downtrend, that did very poorly on Friday, and is going to gap up with QQQ. Let me see if, I don't want to spend too much time, but just maybe off the top of my head, Starbucks. Yeah, Starbucks has been in downtrend. It went sharply down on Friday, broke below that low right there with a large red volume bar and a large price bar. And you can see that it's going to open up, at least pre-market, it's up, back up to this low right here. That's a beautiful stock to day trade to the downside in the first hour, because most likely that weak stock is going to continue to be weak, and it'll have benefited from the gap upwards in the index, and then there's opportunity to trade it to the downside. That's day trading though. I wouldn't necessarily take a swing trade, although it looks okay for a swing trade, but I would be doing a much deeper analysis if I was looking to swing trade this. Now, after the first hour where people take profits and start fading things, then what you want to look for is whether or not these indices are going to continue to the upside. So let's get our day trade levels up. We closed over here around 510-ish, 509, and it looks like we're going to open near 513.74. All these levels, all these purple lines that we've been drawing over the last week are all relevant and very important to watch today during the day if we're day trading. We gapped up above this purple line right here. What we need to see is that, so what might happen is during the first half hour, there might be profit taking. So we could come back and test this 512. If it'd be surprising if we tested all the way to the 508.50, because that was the EMA 20. Yes, that was the EMA 20. So we shouldn't, that would be undoing the entire gap up, which is unlikely because the gap up is so huge, it's 75 basis points. So we might come down to this 512. And then what we want to see is, does that 512 hold? Do we bounce up? Do we break out 514 with conviction? Do we challenge 516? Then do we break that with conviction? And then 518, if this market is really strong, then we might get above 518, but I kind of doubt it because that's already a huge movement upwards on the gap up. And then for us to then subsequently double that on the continuation, that would be really strong. But for us to get even beyond that would be super, super, super strong. And that would be potentially a sign of, or a first sign of capitulation. That could be a huge green volume bar and a huge green price bar. That's potentially. I need to measure it on the day chart in order for me to know for sure. But that would be a huge movement. 520, I believe, is right about our all-time high. Where's my all-time high indicator? All-time high was 518.20, so that would be new all-time high if we did that. That would be really strong for us to go from a pullback to the EMA 20 straight to an all-time high in a single day. That would be, I would consider that probably a capitulation bar. So we're not going to expect to get beyond 518 today, but if it happens, then we'll emotionally prepare ourselves for a potential sharp pullback from that point. So watch the levels very carefully. It's also unlikely that we're going to get super directional immediately before the FOMC. Tomorrow is most likely going to be a sideways day. Today, there is more potential for directional movement, but the closer we get to the FOMC meetings, the more mute the market is going to get. And then after the FOMC meeting, you'll get that huge volatility and perhaps a directionality as well. So there's a lot to look out for, a lot to be careful about. Now, Friday, I was in communication with a couple people. Unfortunately, I wasn't able to do the weekly market review over the weekend and the aftermarket analysis. So, but from what I was telling you guys in the pre-market session is that, hey, if we move down here, just don't freak out, because as long as all the trends hold. And the SPY did hold, and then we said, okay, there's larger potential for the QQQ to not hold, but again, we want to look for confirmation before we react to the break of a trend. So in QQQ, it looked like it was more of a break of the trend. We went below the EMA 20, but we have these examples of, hey, it goes below the EMA 20, recovers, below the EMA 20, recovers. That's not going to be the signal to panic. It's when we recover off of that bounce, then there's the potential to come down and break that trend. But unless we get a weird event like COVID, it's not going to be a sharp and sudden breakdown. It's going to be noticeable, and we're going to be able to position ourselves. So early this week, so before Wednesday, that means we have today's session and tomorrow's session. We want to start getting a little bit more neutral in our portfolios. Any existing positions that we have open that are profitable, we will probably want to take those profits. Any positions that got hit on Friday, we're not going to freak out, because today on the open looks like we're at least going to recover a nice little chunk of it, and that we may drift even higher. However, if we get to a break-even point or a reasonable profit point, we might want to close those out before Wednesday and start repositioning ourselves for that FOMC meeting. So that's what we're going to be looking to do during today's session and tomorrow's session inside of our portfolios. And just watch out. This week has high potential for us to decide if we're going to move down and start perhaps pulling back to this MA50 in the QQQ, potentially MA50 in the SPY. We're looking for a 5 to 10% potentially correction. So That would be roughly 5% in the SPY. If we came down to the MA50, 10% would be MA 150 or MA 200. We'll just see how we're not entirely sure. It's not necessarily going to happen this week. At some point during this year, we will get that pullback. And we have been saying in the next 2 to 3 months, but that's been a few weeks now. So in the next 2 months, we are still expecting a 5 to 10% pullback or correction. And it could begin to happen this week, but there's no guarantees that'll happen this week. Okay, so for now, our uptrends are holding. QQQ looks like we're bouncing right back in, so we're still going to call that the uptrend is holding. So overall, normally you always hear me say uptrend is still intact. We want to point our portfolios up until we see that break. For this week only, because of that, we have such large news items, that FOMC and the NVIDIA conference, I would probably be more comfortable with just going flat and going neutral rather than keeping that little bit pointed upwards. And then once we get clear directionality, we can decide, okay, well, we'll go upwards again. That might mean we miss out a little bit. If we just bounce right here and go up, it might mean we miss out on a little bit of profits. But when we manage our portfolios, we want to first look through a lens of risk and then through the lens of opportunity. So it's just a little bit safer. I'm just being a little bit more conservative because I'm getting not so great feeling about this week. And we don't trade our feelings, but after being in the markets for as long as I have been, I do listen and to honor my feelings, but I trade what is actually in front of me. It doesn't hurt me to be a little bit more cautious, but it does help me to be potentially help me to be a little bit more cautious. So in this case, it's okay for me to just listen to my feelings about the overall markets a little bit. And that doesn't mean, hey, oh my gosh, I'm so pessimistic, I'm going to point my portfolio downwards when we're still on uptrend. No, that would be the wrong voice of my feeling to listen to. We're just being a tad bit more cautious. Being neutral is always okay. Being on the sidelines is always okay. Missing on one particular opportunity is always okay. And then as long as I don't keep on doing it over and over and make it a pattern and make it a habit of sitting on the sidelines rather than taking opportunities. Okay, so for this week, because there's so many news items and so much potential for volatile movement, personally, in all my portfolios, I'm probably going to start moving my portfolios towards neutral before the announcement on Wednesday. So I have, let's see, I think that's pretty good. We know what to expect for day trading. So if you do decide to day trade today, we are an up day and we're probably going to have a green bar. Initially, we may move downwards before we get that green bar. But again, if you're going to day trade, then just watch these levels very, very carefully. So have a wonderful and profitable day. And I can't make the aftermarket session today. So I will absolutely record a video though. So you'll get the notification if you're subscribed to the YouTube channel. You'll get the notification when that comes out, but I won't be doing it live today. Have a wonderful day. I will see you live tomorrow morning.